Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about FANGZHOU JIANKE interim report. FANGZHOU Inc. offers a diverse range of businesses and services, including online retail pharmacy services, comprehensive medical services, wholesale customized content and marketing solutions, online chronic disease management, platform for patients with hypertension, cardiovascular, and respiratory diseases H2H services, plus online medical consultation services, plus e-prescription services, plus prescription refill services through mobile application, healthcare products through online retail pharmacy service, platform hospital operations. The significant drop of over -42.55% in FANGZHOU Jianke's stock price in the past year can be attributed to several key factors. Firstly, the company listed below its initial public offering, IPO, price on the Hong Kong Stock Exchange, with a substantial portion of funds raised being consumed by listing expenses. Additionally, despite generating considerable revenue, FANGZHOU Jianke continued to operate at a loss from 2021 to 2023. The company's reliance on online retail pharmacy services also puts it in a highly competitive market against established giants like JD Health and Alibaba Health. Furthermore, the company experienced decreased user engagement and slowed growth prior to its listing, which may have raised concerns about its long-term viability and market appeal. These factors combined to create negative investor sentiment around its IPO, leading to a substantial decline in stock price. The primary drivers of revenue growth or decline in this company are primarily attributed to its online retail pharmacy services and comprehensive medical services. The former has seen a significant increase of 28.2%, page 11, and 28%, page 41, while the latter has experienced growth rates ranging from 12.4% to 11%. Additionally, partnerships with pharmaceutical companies and the launch of innovative drugs through the platform have contributed to revenue growth. On the other hand, revenue decline is mainly due to the wholesale segment, which has seen a decrease of 15.7%, page 14, and 16%, page 41. The customized content and marketing solutions segment has also experienced a decline of 23.6%, page 11, and 24%, page 42. Net income and profit margins underwent significant changes in the given period. Initially, the company reported a loss of RMB 818,725, but this turned into a gain of RMB 12,482, indicating an improvement of RMB 2529. Profit margins also experienced fluctuations. The gross profit margin decreased from 20.1% to 18%, while the operating profit margin improved from -56.6% to 0.8%. However, the adjusted net profit margin increased from 0.6% to 1.2%. These changes suggest that the company's financial performance has stabilized and shown signs of improvement, with a shift from losses to gains in net income and an increase in adjusted net profit margins. The company's financial performance indicates a strong ability to generate positive operating cash flow. This trend is evident across multiple periods, including the 6 months ended June 30, 2025, where RMB 35,848 was reported as a positive operating cash flow. Furthermore, the company's net change in working capital also suggests a significant positive operating cash inflow. These indicators collectively demonstrate that the company is successfully managing its finances and generating sufficient cash to support its operations. The company's debt level has undergone significant changes. Notably, bank loans have decreased by a substantial 95.4%, from RMB 65,565 to RMB 3,001. Additionally, lease liabilities have also seen a decline of 10.9%, from RMB 16,801 to RMB 14,969. However, the interest expenses are not explicitly mentioned in the provided pages, except for the interest paid, which was RMB 260,000 in 2024 and RMB 50,000 in 2025, indicating a significant decrease in interest expenses from one year to the next. Management is optimistic about the company's outlook, highlighting several key areas of focus. The primary strategy revolves around leveraging AI applications to improve chronic disease management, reduce costs, and enhance efficiency. This AI plus chronic disease management approach is expected to drive growth. To support this strategy, the company plans to expand into key therapeutic areas such as weight management, metabolic disorders, and infectious diseases. Additionally, it aims to strengthen strategic partnerships with pharmaceutical companies and foster innovation through collaborations with commercial insurance companies. The company also plans to invest in talent acquisition and development, recruiting a team of software engineers to improve AI technology and big data analysis capabilities. Furthermore, it will optimize infrastructure in areas such as computer vision, natural language processing, and search-based recommendation algorithms. Financially, management anticipates an improvement in operating cash flows and sufficient working capital to meet present and future cash requirements. Overall, the company is positioning itself for growth through strategic investments and partnerships. There were no significant transactions involving the acquisition of new businesses or assets by the company in the given period. Similarly, there were no divestitures, which involved the sale of existing business units or assets. This indicates a stable and unchanged corporate structure for the company during this time. That concludes the financial summary for FANGZHOU JIANKE. Feel free to comment below, and I will be happy to answer them when possible.